Ever wonder how forensic accountants catch fraud and financial lies, and how AI can supercharge that process? Welcome to Forensic Financial Statement Analysis using AI. Now, whether you're a total newbie or a finance pro, this course will take you on a hands-on journey to uncover the truth hidden in financial statements.
I'm Gary Rushin, a CPA with investment banking experience. Chris and I are your instructors for this course, and we're excited to guide you. We've packaged this program with engaging visuals, real-world case examples, and interactive exercises to make learning forensic accounting fun and effective.
Now, what makes this course special? Well, it's AI. You're going to learn how to leverage cutting-edge AI tools like ChatGPT and more to analyze financial data faster and smarter. Now, imagine having an AI assistant help you spot red flags in a company's books. We'll show you how. Plus, we've designed a unique learning experience tailored to your level, as there's 4 ways to take this course as follows. There's a beginner track, and this is perfect if you're new to accounting, and we start from the basics. There's an intermediate track, and this is awesome if you have some background, and you can skip the fundamentals and dive into deeper analysis. And there's also a genius track, which is for the advanced learners, and this track is fast-paced and full of expert-level insights. And lastly, there's the all track. This is the full package. You'll get everything from all levels for a comprehensive mastery.
No matter which track you choose, you'll get practical hands-on training. You won't just watch them, you'll do them. We provide an interactive Excel dashboard where you can analyze any company's financial statements step by step. You'll fill in an analysis, check boxes as you progress, and even generate your own forensic analysis report right in Excel. It's like a financial detective game, guided by AI and us as your mentors.
By the end, you'll know how to spot suspicious accounting, analyze financial reports with confidence, and use AI to gain an edge in your investigations. 2 instructors, 4 tracks, 1 exciting journey into forensic finance. If you're ready to learn by doing and have some fun with AI along the way, then join us in Forensic Financial Statement Analysis using AI. We can't wait to see you in the course. Welcome to our 321st weekly webcast. This is an AMA, like you see on Reddit. AMA stands for Ask Me Anything. You can ask me investing questions, career questions, consulting questions, startup questions, personal growth questions. My humble goal is to help you make more and be happier as well from a personal growth perspective. Now, Gary Raven, who you saw in that promotional trailer video, just left my house, who's with me for a couple of days. He spent all weekend at my house. Love the guy. He has a wealth of experience. I've learned so much from him. He has literally more than 50 years. That's right. 50 years of experience in investment banking as an accountant and doing advanced finance stuff. And so that course we just showed you a preview of will be coming out next month. It's been recorded and now it's in post-production. I hope you thoroughly enjoy it. Okay, he's a good guy. And I miss you, Gary, if you're watching, buddy. All right, I've learned so much from him. First up, let me kick it off with Ray, who wrote, hi, Chris, questions for me. Sure, let's do it. If a company goes public in 2025, when is the earliest time to consider investing? 6 months after the IPO? Yeah, it all depends. So what happens is when a company goes public, when I worked in venture capital and I got shares in companies that we invested in and went public, I was not allowed to sell day 1 on the IPO. And neither are insiders or other venture capitalists. What happens is this. There's a lockup period. You have to wait 6 months until you can sell. And I remember at one point, a very high percent of my liquid net worth was in one particular company, a storage company that went public. And I didn't care how well the company did. I had to sell a lot of it, if not all of it, 6 months after, right? It's just bad risk management. And a lot of people inside these big companies think the same way. So they sell a lot as well. And that's why you see a lot of weakness 6 months after an IPO. Now, what I used to do when I worked in the hedge fund industry is I would short stocks that went public. And don't short stocks, buy puts if you want to. And I can talk about that in detail if you'd like. I would short stocks about 5 months after they went public, knowing that there's going to be an increased in amount of selling. Doesn't always happen. It's getting harder to do from a front-running perspective, meaning being there before other investors get there. But it all depends on the market environment as well. So if we're in a really, really crappy market and investment bankers make the stupid decision of taking companies public. In a month like April of this year, we saw a lot of volatility because of tariff concerns. Then the stock probably will go down a lot. Okay, usually they usually underprice the IPO by about 30%, which is why you see a one-day pop of 30%. If you do research on a company and you love the fundamentals and it doesn't scream out of the gates on day one, then yes, start a position. So how do you do research? Step one, you always read the S1 documents. Now, in my business programs, my finance bootcamp programs, we do a lot of due diligence on Facebook, which I invested in my venture capital fund, along with every other VC before the company went public. But you read the S1 cover to cover. What you then do is you update your financial model from scratch. And I teach you how to do that as well. And the benefit of doing this is you can come up with a target price on the company in 5 years. Okay? Don't ever look for a target price near term. Day traders will lose their shirts. And I say this with love in my heart, and I have so many times before, please don't day trade. Because you can't focus on random events you can't control. And we call these black swan events. I'll give you an example. A lot of people went short the market massively in April, right, because of Trump tariffs. Now, when it comes to Trump, and I didn't vote in the last election, I didn't particularly like either candidate. But when it comes to Trump, never focus on what he says, focus on what he does. And so what happened was the market sold off materially in April. Stocks like Nvidia had an RSI, relative strength index, of 20, and traders went massively short, and they lost their shirts. Also, last Saturday, we saw, and it's a good thing, that Iran's nuclear capabilities were taken away from them. And then on Sunday night, what happened was Iran sent some rockets to Qatar. Tons of people went short the market on Monday. Makes sense, right? You think the market would go down, but the market went up. You can't forecast these things. I always want you to be very, very long-term focused, please. And when Warren Buffett invests in a stock like Coca-Cola, which he bought around 1990, which he still owns now, he buys the stock and then he tells himself, I'm assuming the market's going to be closed for 10 years. Of course, it's not going to be closed for 10 years, but that's how long you got to think. The longer the view, the wiser the intention, and you'll sleep better at night. That much I promise you. I'm telling you to work smarter and not harder. Okay, because I care. All right. Next question is this. Would you give up from investing in a company if 3 of its customers bring 60% of revenue? It depends what stage of the company it is. If it's a publicly traded company, I wouldn't touch it with a 10-foot pole. If it's an early stage company, around A round, B round, C round, meaning venture capital backed, that's okay. It's still early stage, as long as they have bulge bracket reference customers like big banks, government institutions, etc. But I never like to invest in any publicly traded company that gets more than 10% of its revenue from one customer. It's too dangerous. And if they do get well over 10% or 20 or 30% from one customer, what does happen sometimes is the stock trades at a discount valuation, meaning a lower PE, for example. A great example of this is an Israeli software company I invested in years ago called Amdocs, the ticker was DOX. It never traded at the same PE multiple as other software stocks. And the reason is because their focus is on telecom billing, which means that the bulk of their revenues comes from one sector, telecommunications. Yeah. And sometimes you'll notice when companies report earnings. So when companies report earnings, they report earnings 4 times per year. They issue a press release called an 8K. Then they usually do a conference call that anybody can join, including all of us. And during the conference call, there's a point near the end where Wall Street analysts from firms like Goldman Sachs, Morgan Stanley, etc., get to ask management questions. And quite often, one of the questions is this. Did you have any 10% customers? It's a risk. And it's the same thing with your personal portfolio, right? It wouldn't make sense to have 70% of your investments in one stock. In fact, from a risk management perspective, I advise my clients to always have at least 20 stocks in your portfolio if you're going to invest in stocks. And I don't want any stock to be more than 5% of your portfolio, right? I don't care if a stock has a cure for cancer. It's just good risk management. Now, the exception to that is if you invest in liquid ETFs like ticker VOO, which I own, which I think is a great long-term investment. Last thing I'll say on personal risk management is I don't want you to have more than 20% of your personal portfolio in any one sector. Okay, no more than 20% in technology, retail, consumers, industrials, commodities, etc. Okay. Next question is, what should we bear in mind when we invest in semiconductor sector, excess inventory? What do you monitor? Yeah. So a couple things. Number one, you're going to monitor geopolitical stuff, right? Especially with respect to China and Taiwan. Now, Taiwan's got a big company called Taiwan Semiconductor. And more than 60%. So Nvidia designs great chips. And for the most part, Taiwan Semi creates them. They produce them. In more than 90% of Nvidia's higher end chips, meaning higher margin, are actually made by Taiwan Semiconductor. So geopolitical is a big one. And what that means is supply chain, right? Because the products are kind of coming from Taiwan and going to Nvidia. And then Nvidia distributes it all over the world. I would also look at antitrust when it comes to larger companies. I think at some point, the Department of Justice might think about limiting Nvidia from growing too much more in the very, very long run, meaning they'll stop them from making small acquisitions even, which is what they've done with Facebook as well. What I'd also look at with semiconductor stocks is I would only invest if the founder is there. And I personally only invest in tech companies if the founder is still running the company. Okay, and Jensen Huang, who's the brilliant founder and CEO of Nvidia, is still running that company. I think it's a great long-term investment. I don't think you're going to make a killing on Nvidia just because of the law of large numbers. It's a very big company, right? It's kind of like the U.S. economy. U.S. economy is the biggest company, so to speak, in the world, about 20% of the world's revenue, roughly. And there's a law of large numbers to the extent that the United States economy will never grow more than like 3% per year or so. Now, when it comes to semiconductor companies, okay, whether it's semiconductor stocks or semiconductor capital equipment like AMAT, Applied Materials, or ASML, sorry, that was awful humor. But when you look at these stocks, what I want you to also do is I want you to look at EV to sales. Okay, it's kind of like price to sales. And let me explain why. So I know the number one semiconductor investor on the planet who's made billions, and I used to work with him. And his thesis is this, right? He's unemotional when investing. And what he does is this. When he looks at semiconductor companies and semiconductor capital equipment companies, he looks at EV to sales. Now, EV to sales is, it's like price to sales, okay? Except EV means market cap plus debt minus cash. And you look at EV to sales, and you're going to look historically to see what companies like ASML or AMAT, for example, traded at on an EV to sales basis. These are cyclical companies. I know there's secular growth right now because of AI. But at some point, a lot of these companies will trough. They'll bottom, in a recession. And I want you to invest at them at the trough, meaning the lowest EV to sales level compared to previous economic cycles. Yeah. And you got to be long-term focused when you do that as well. Yeah. Now, when it comes to Nvidia in general, I showed you that promotional trailer for that video that course coming out. I think it's next week or the week after. But what we do is we actually do a case study on a couple semiconductor-related companies, Nvidia as well as Supermicro. And this will help you a lot when you're doing your due diligence on companies, specifically when you look at what are called the footnotes in the financial statements. Okay. Now, find the 10K, the footnotes are in 10K. The 10K, of course, it's got the three most important financial statements: income statement, balance sheet, cash flow statement. But what a lot of people overlook, right? And if you do what I'm about to tell you, I promise you'll make more money in the long run if you do your own research. A lot of people overlook what are called the footnotes. And remember when we were younger, we used to write book reports and we have a little footnote. It kind of works like that in the 10K. There's 10 major sections of footnotes. And these footnotes have so many golden nuggets that most people don't look at. It will tell you stuff about supply chain. It'll tell you stuff about FX exposure. It'll tell you stuff like how much short-term debt is due in the next 5 years and thereafter. You have to look at that. And that course of mine and Gary's, and I'm so grateful to partner with Gary's, coming out again in July. Let me move on now. Okay, next question is, the semiconductor market is primarily in China, as the production devices is almost all there. Is that risky? Absolutely. I'd say a bigger risk is Taiwan. And for obvious reasons, there's a lot of tension between China and Taiwan. I'm not worried about that, geopolitically speaking, because of what Trump did last Saturday night with Iran. Yeah. But under Biden, it might have been a different story. Yeah. Okay. Next question is, how often do you give up on a company when you do fundamental analysis? Yeah, let me show you. Yeah. So a lot. It's kind of like writing a business plan. Like they never started a company before writing a business plan. And the way you know you have a great business plan is if you actually finish the entire business plan, right? Now, if you start writing a business plan and you figure out it sucks, don't finish it. Move on to something else. By the same token, this is one of the many templates I provide my clients. What you do here is you analyze 100 different factors for a company. Okay, and I ask you 700 or 800 questions. What comes out of this is a one-page summary. This is dummy data here that you can bring to your interviews if you want to get a job in finance. And you print out your detailed report, and there's also a dashboard. But if I start off, and the most important step, and the first step always is the management team. Don't waste your time looking at technical analysis or other crap before you look at the management team, because that's what a company is. But if I start here, and I look at the management team and the products and a couple other things, catalysts and drivers, and I figure it sucks, there's no point in creating a financial model. Yeah. So it all depends. Yeah. And I don't want you to invest in companies until you create your own investment report. Otherwise, it might make sense to buy ETFs. Yeah. All right. Next question is, when I invest in a stock, I've thoroughly evaluated and its price climbs by 30%. I find myself strongly tempted to sell it, hoping to repurchase it later at a lower price. Let me talk about that quickly. So whenever you look at analyzing companies to make a lot of money, and you should always look at investing in companies that are 5 by 5. What does that mean? 500% return within 5 years. Now, that's exactly what I do. Am I usually right? No, I'm usually wrong. But if the stock only goes up 300 or 400%, obviously I do quite well. And if you do a lot of research on a stock yourself, you're not going to make the cardinal sin of investing, which is selling it when it goes down. And I know I've said this before, but it's important. Warren Buffett said the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. I want you to do your own research. That being said, if a stock's RSI is over 70 or 80, there's nothing wrong with taking a little bit off the table and reinvesting at a lower level. Okay, there's nothing wrong with that, but just make sure you're not paying taxes on it. So it might be in your savings account. And by the same token, if you don't have a full position on a stock, meaning it's not a 5% position, and the stock gets murdered, make it a full position. And I'll show you a great example with Nvidia again. So I'm going to go here to finance, give me a second, finance.yahoo.com. Never pay for any data service. It's all free, right? And I'm going to go here to Nvidia, okay? And Nvidia in the month of April, when everybody was freaking out, in the month of April, the RSI, meaning the relative strength index on Nvidia, was actually about close to 20, okay? So just look at this first white chart here. Ignore the bottom one, please. So back in April, you can see here that the relative strength index, it got close to 20 right here. Okay, you got to be a contrarian. Be a contrarian, watch your net worth take off. So there's nothing wrong with buying more here, and there's also nothing wrong with considering taking a little bit of profit here, okay? Don't day trade though. Like right here, you'll see, kind of consolidate a little bit lower, but don't focus too much on this because you're not going to make a fortune doing that. But it is fun to trade a little bit. I will be completely honest. Yeah, just be careful. All right. I used to pay Wall Street millions in commissions every year. Okay. Next question is, do you think Meta could continue to grow at a high pace? No, it's the law of large numbers. It's very tough for them to do so. That being said, you still have Mark Zuckerberg running the company, which is great. In fact, if you look at the cover of the S1 filing, this is the file they released, Investment Bankers and Lawyers 2012. You'll see that Zuckerberg, although he owns a smaller percent of the company now, he still has voting control. Okay? So he can do what he wants to do. And I love that. I love when a founder is in complete control because that's what a company is. I think Zuckerberg, yes, he's controversial, but I think he's an incredible manager. And he creates a lot of shareholder value. And I'm sure a lot of you saw that they're making the social network part 2. I think it's going to be coming out next year. Yeah. And it's going to focus on events back in 2021. And of course, I'll do a summary of that as well on many of the Wall Street Pro Reacts videos I make. I'm doing Suits soon as well. 7 videos, 1 for each season, just to teach you finance stuff. Yeah. But in terms of Facebook, so the only way that Facebook is going to see accelerating revenue growth is if they make big acquisitions. But the Department of Justice is not going to allow them to do that. Now, historically, when a company gets too big, it's bad for the market. Governments hate that. And I hate it because competition is a good thing for a consumer. So, for example, Apple has gotten too big. It'll be broken up one day. But remember when the iPhone first came out and there was all these awesome apps? I haven't seen a groundbreaking new app in ages. I think that the Apple Game Store that they ship with this thing shouldn't be allowed. It's ridiculous. It kills competition. Now, when it comes to the DOJ and Facebook, meaning Meta, they have stopped them from doing very small acquisitions as well. But there will come a time when all these companies are broken up. And Facebook knows it too, which is why they rebranded themselves as Meta. Because they know one day the company is going to be broken up into Facebook, Instagram, WhatsApp, and other stuff. Sorry. The same thing with Google. Years ago, Google, what they did was they renamed themselves Alphabet for a reason. Yeah. Okay. All right. And generally speaking, it's really interesting because a lot of people will ask me, a lot of my clients will ask me, when should a company go public? Like they're private, they've raised a lot of money from venture capital firms, when should they go public? Well, typically what happens is when you're a private company, revenue growth is accelerating, okay? And the second revenue growth is positive but starting to decelerate, the venture capitalists call their buddies on Wall Street, investment bankers, say, hey, take it public. Now, for publicly traded companies, it's extraordinarily rare to see revenue growth acceleration, okay? If you see a company is public and revenue growth accelerates, you've got to read through the annual reports, which I teach you in my program, to find out if that's organic growth or acquired growth. Let me move on to the next question. Next question is, why don't you have prices on your programs, meaning silver, gold, etc.? Can I buy silver now? Yeah. So I've changed my programs. It's much more interactive. You know, in the past, I've offered just one short office hour session with me per week. I want to get to know my students better. It's more fun for me. So what I'm doing now is I give you Zoom office hours every single day in my programs except for silver. Okay. And that's 7 hours every week, every Monday, Tuesday, Wednesday, Thursday, Friday, small group Zoom meetings where I help my students. I take any questions you have. I look at your financial models, your resumes, I mock interview, etc. That's 7 hours per week. That's over 300 hours per year. Plus you get over 500 hours of my content and tons of new content you can't get anywhere else, of course, or in any of my other programs. If you're interested, please go to the description of this video and set up a call with my team. We're growing very fast, and my use of capital is going to be built to build those 1,000 schools in Africa. I've talked about the schools I've built in Africa, Rwanda, Kenya, etc. in the past. In order to fulfill my life mission of dying broke and building these 1,000 schools, it cost me about $100,000 per school. So $100,000 times 1,000 schools is $100 million. That's my use of proceeds. That's where my money goes. We're growing quickly. Yeah. Yeah. And if you're interested in working for us, please keep watching this weekly webcast. In a couple of weeks, I'm going to announce a ton of roles that are open and we're hiring. Yeah. All right. Next question is, if you spotted 50 companies that may be good investments, which one would you choose to start with? Yeah. Yeah. So whenever you look to invest in a company or any sector, I want you to ask yourself one basic question, which is this. In 5 years, will this company be more relevant or less relevant than it is today? So AI, obviously more relevant. You know, companies that, I don't know, invest in oil drilling, less relevant. So you got to think that way. And by doing that, it'll stop you from getting, seduced into buying value traps, meaning stocks that are cheap for a reason. Yeah. And never, ever value a company based on this year's earnings. Always look at least 5 years out. I teach you how to create financial models from a non-theoretical perspective, just based on my experience and what works. Yeah. And there's a reason I humbly have more than 2 million paying students in every single country. Humbly. That's a Canadian brag. I'm so sorry. I wish there was a 7-second delay so I could take that back. Give me 1 second. Now, whenever you guys are giving a presentation or interviewing, if you find your voice goes, and I've been recording 24/7 over the past week on a new course, you can always use a product called Clear Voice. I'm not sponsored by anybody, never will be, but give me a second. All right, I'm good to go. Cool. And I'm going to Stanford University as well for an analysis so that when I get older, my voice sounds like I'm young. I'm trying to reverse aging, which is tough to do. Yeah. The older I get, the better it was. Okay, let's move on. All right. And I didn't get as much sleep as I usually do last night because my son and I were playing. We just got this. We're playing the new Mario Kart game, which is insane. And there's an open world part to it as well, which is a little bit like GTA. They really got it right this time, the stand and everything. It really is a remarkable product. and I'm a man-child. And when GTA 6 comes out in May of next year, I love you all so much, okay? But not that much, because I'm taking a month off to play. Yeah. And I told my family, don't bother me. I'm playing GTA 6 for a month next year. I know, I'm a man-child, but I love my life. Okay. Next question is Nvidia moving from hypergrowth to steady market cap compounder? I think so. Yeah. I mean, we've seen incredible growth, right? But there hasn't really been much competition. I think we're going to see a lot of companies get financed and go public over the next decade in the semiconductor sector. The reason we haven't seen that very much in the past couple of decades is because it's very expensive to make a physical product. Yeah. But just given the law of large numbers, it's going to be harder for Nvidia to really see accelerated hockey stick growth. Yeah, it's just a big company. Yeah, well run. All right, next question is Peter Lynch. I have the book right here. Give me a second. Peter Lynch wrote this great book called One Up on Wall Street. I want you to read it, please. He was the portfolio manager at the flagship Magellan Fidelity Fund back in the 1990s, the quintessential growth investor. And his secret to his success was brilliant, but simple. He would always try to use the products before investing in the company. For example, his wife tried out this new pantyhose product that comes in those egg cartons, and she loved the product. They invested, they did well. And I remember that because I used to ask my mom for them so I can put my Smurf collection in them. Okay. I used to collect Smurfs, guys. Yeah. So the question is, Peter Lynch was investing in dull businesses that weren't particularly founder-led, right? I'm not sure. I haven't done that analysis. I personally like to only invest in companies where the founder is running the company. Otherwise, what happens is bureaucracy sets in. And when I worked in venture capital, I wrote an article in a publication I was a guest writer, called Venture Beat on that topic. Just search for Venture Beat, Chris Haroun articles, and you'll find it there. Yeah, never invest in a company when the founders have left. Yeah. All right, so Ray wrote, so if the April RSI was 20 for Nvidia, and now it's 70, does that mean we shouldn't buy now, but wait for another time in which the RSI between 20 and 30? If it's not a full position right now, I would not add to it. Yeah. And always tell yourself, be careful of FOMO, meaning fear of missing out. Always tell yourself, I'll be able to buy this cheaper, because you will. Be patient. Yeah. Okay. And my favorite thing when I start buying stocks is I do a ton of research. I complete all my spreadsheets. I start putting on a position. I usually buy 25 to 50 basis points day one, meaning 0.25 to 0.5% of my portfolio. And then I hope it goes down. I hope it gets murdered so I can make it a full position, 5%. Yeah. I know it's a different way to think. Okay, next question is, can I make alerts based on daily RSI? Is it worth doing that when I've already evaluated and chosen several stocks? Yeah, absolutely do that, right? Because if the relative strength index, and you got to look at fundamentals and valuation first, please. But if the relative strength index on a stock you've just started to accumulate goes down a lot and the RSI is 20, that's your good indication to consider buying more and making a full position. And I love to invest in stocks that are broken stocks, but not broken companies. What does that mean? Well, a broken stock means a stock that is oversold relative to what you think the target price should be, right? And it might be a time when the entire market is selling off, or a geopolitical event that you can't forecast occurs that causes one of your stocks to go down a lot. That's a broken stock, not a broken company. And you have to be a contrarian. It's the only way to make money. And I want you to only invest in stocks that people are going to like. And as a proud Canadian, give me 1 second here. As a proud Canadian, Wayne Gretzky was successful not because he skated to where the puck is, but rather because he skated to where the puck is going to be. I want you to invest in companies that people are going to like. Be long-term focused too. Okay. Tommy wrote, do you view annuities as a good retirement income strategy? And can you clarify the meaning of annuities? Yeah, annuities basically means you invest in something, you get cash flow every now and then, right? So a lot of times what people do, they'll invest in insurance products that will pay them cash flow. I don't like doing that. I don't like buying stocks or investing through insurance companies, right? Because there are so many hidden fees we don't understand, right? If you want to buy a collection of stocks, buy ETFs where the fees are very, very low from companies like Vanguard after you do your research. Yeah. Now, when it comes to retirement savings, what I always recommend is this. You take 100 minus your age. And that's the percent of your portfolio to put in a certain class of stocks. So for example, if you're 85, 100 minus 85 is 15. That means 15% of your portfolio can be in riskier growth stocks and 85% maybe in some annuities and AAA rated bonds, high dividend yielding stocks, the dogs of the Dow stocks. And what the dogs of the Dow stocks means, you take the 6 highest dividend yielding stocks in the Dow 30. Yeah, lower risks. Okay, next question is, what is the best way to short biotech, which huge position before trail data? Yeah. A couple things. First of all, if you think, and I say this love my heart, okay? And I'm not saying you're doing anything wrong, you're not. But if you think you heard something that the whole market doesn't know, don't do it, please. Yeah. And in general, I would not short. Because if you short a stock, the losses can be infinite. I'll give you an example. In January 2021, a lot of people went short GameStop. And GameStop went up 29.4 times in the month of January 2021. And a lot of people lost their shirts. And according to people familiar with the matter, Michael Jordan even lost $500 million doing that. And a lot of big hedge funds went belly up, like Melvin Capital, which had a couple of $1 billion in assets under management. So what do you do instead? Instead, you buy puts. Okay. Now, a put basically means you invest this much. If the stock goes down, you make a lot of money. If the stock goes up, all you lose is this. With a short, you invest this much. If the stock goes down, you make money. If the stock goes up, you lose way more than what you invested. Be really, really careful with that, please. Yeah. And be careful with biotechs too, because quite often biotechs, there's a binary event, right? They get FDA approval for clinical trial, for example, or for a new product or whatever it is. And the stock goes up 50, 100%. Or the FDA says no to one of their products, which is what happened with Biogen, ticker BIIB in 2005. And the stock cracks about 50%. Be really, really careful, please. And if you're going to invest in smaller cap biotechs, please don't make them big positions. Yeah. Okay, the next question is, how does IPO allotment work for family offices? Yeah. So what happens is a company like Goldman Sachs or Morgan Stanley, right? They'll take a company public. And when they take a company public, the investors that get shares predominantly are the investors that pay the most commissions to Goldman or Morgan Stanley, like the big hedge funds and mutual funds. Okay. And the investors that management thinks should get shares based on their one-on-one meetings with them. And when I worked at Goldman Sachs years and years and years ago, there's kind of an unwritten rule that Fidelity, which was their flagship fund, was run by Peter Lynch. Fidelity would always get twice as many shares in an IPO as the number 2 person, more or less. So it comes down to commissions. Now, after the hedge funds and mutual funds get their allocations, then what happens is there's a little bit of money left over for high net worth investors that are clients of a firm like a Goldman Sachs or Morgan Stanley. And Jim Cramer, who you guys all watch on CNBC, please don't listen to his stock picks, do your own research. But Jim Cramer, he worked at Goldman Sachs and he worked in private wealth management. His clients were actually Steve Ballmer as well as Bill Gates after the IPO of Microsoft back in '86. Yeah. And they usually get a pretty small allocation. Yeah. All right. Next up, Andre. It's been a while. How are you, man? You wrote, what time does the MBA weekly meeting start today? Yeah. Yeah. So for those of you in Silver, Gold, Platinum, legacy products, it starts at 10 a.m. Yeah. And for those of you in my newer products, you can always go to the link in the description of this video, set up a call with somebody on my team to learn more. It's every single day. Yeah. But today it's 10 a.m. Pacific time. Okay. All right. Next question is, what are your thoughts on Chick Fil-A business model for franchising? How many? Do you think it's a good investment? Yeah. So you have to create a financial model for that. Keep in mind that I think, but I could be wrong, I think that those stores operate one day less per week. It might be Sundays, but do your due diligence on that, please. What I want you to do is I want you to go to ChatGPT and run a deep research process. And let me show you this quickly because this is going to help everybody in this call. Okay, this really is a game changer. Okay, so I'm going to go over here to ChatGPT. Okay, and this is a new feature by my CMO, Cassandra. is you're going to switch over here to ChatGPT 4.5. Okay, I can't use it because I've used all my free instances of it. Okay, so you'll switch over to 4.5. Then what you're going to do, assuming you're in 4.5, is you're going to type a prompt and then click on research and then go. And it's going to take between 10 and 20 minutes to be completed. And it's the most insane research ever. And so what I would type here is, explain to me the pros and cons of buying a Chick Fil-A franchise versus buying a McDonald's or Subway franchise. Provide me with the economics, etc. And that might help you out. But what I would also do is, before you ever start a company or invest in any franchise, you have to write a thorough business plan. And of course, I have a template for that. I have a template for everything because I'm a nerd. But what I want you to do is, in the program you registered for, my finance program or whatever it was, you're going to write a business plan and go through my venture capital bootcamp. Okay, and after you finish the business plan, meaning look at the financials, and I'm there to help you every single day on Zoom calls. A business plan will come out of it, and then investor slides as well. I want you to finish that up before even considering investing, because failing to plan is planning to fail. And all these templates, the many templates I provide my students and clients with and corporate clients with, they're kind of like they're like a safety net, right? To ensure that you're investing the right amount of money in the right product and you don't lose money, okay? And I can't guarantee you won't lose money. It's the same thing with real estate. So I have a real estate course only available on my website for my clients. But before you buy any real estate product, this is me buying time out loads. Before you buy any real estate product, I want you to complete this entire real estate document here, okay? And I ask you, and what comes out of it is the one-page executive summary and a massive, massive business plan as well. Works in every country in the world. I teach you about location, how to value real estate 5 different ways, how mortgages work. I create your income statement, your cash flow statement, your balance sheet, and all the formulas you need so that you can decide to buy a real estate property or not. Now, it's my dream. And you can always go on the primary residence track or the residential investment rental track. And it's my dream that all of my students make more money in 10 to 15 years, make more money from the real estate investment properties than they do from their base salary. Okay, and it's a better investment than stocks, actually. Okay, if you do your research, and I'm here to humbly help you with it. Real estate's a better investment than stocks because of this. If you invest in real estate and you're renting it out, I don't care what country you're in. For the most part, you can deduct the interest on the mortgage, tax deductible, so you're paying less tax. Plus, you get to use depreciation to pay less tax, okay, on the real estate investment properties. And you can't deduct the interest if it's your primary home unless you're in the United States or Switzerland. Yeah, and that's why, like, the richest people in the world, they own real estate because they pay as little tax as possible. In fact, if you go back to the 2016 presidential debate, the first one between Hillary Clinton and Donald Trump, Hillary said to Trump, basically, you're not paying taxes. That's not right. And then Trump, who's pretty transparent, right? He said this. He said, of course, because I own real estate, I get to use depreciation. The richest people in the world, okay, the ones with FU money, sorry, that means forget about you money. They own tons of real estate because they get the depreciation write-off. Please invest in real estate. And for those that haven't bought your house yet or apartment, I get it, times are tough. I had to wait until my 30s to buy my first place, early 30s in New York City. And I remember buying after 9/11. It felt awful. And if it doesn't feel uncomfortable to buy, then you're not buying big enough house or you're not buying at the right time. But let me show you a very, very quick analysis and then I'll move on right here, okay? If you're gonna invest, so let's say that you spend $1,000 a month on rent for 50 years, okay? And instead of renting, you bought, what you make is $11 million on your house. It's ridiculous. I can run through the math for you other finance nerds up there. There's my formula. All right, let me get to the next question. All right. All right, hold on one second. Oh, a lot of questions. Yeah, and I can never get through all the questions. So for those of you in my paid programs, again, you can go to the link in the description. I'll see you in the daily Zoom calls. And you can ask me there. Yeah. All right, hold on one second. It is hot as hell in here, man. And for those of you on the East Coast of the United States, I'm sorry what you're going through in terms of the heat. My air conditioner broke because a freaking mice climbed in it. So the guy's going to fix the AC today. That's why I'm a bit shiny. Yeah. And by the way, and I don't care, I'm going off script here. Whenever you're doing, whenever you go to an interview, okay, or you're doing an interview over Zoom, okay, what happens is this. And when I've been in filmed on film crews or television, whatever, there's always a makeup person, okay. And Gary did this too when he came here. You got to get rid of the shine. I know it's crazy. Maybe I'm beautiful. Maybe it's Maybelline. Please tell me somebody got that. Okay. I teach everything, including makeup. All right, give me 1 second. Who gets the better return on investment? Angel investor or venture capitalist? Yeah. So angel investors are going to make more if the company makes it. Venture capitalists are going to make less than the angel investors if the company makes it, because they on a percent basis, because they invested later on. The later stage you invest before a company goes public, the less money you make, right? But the probability of making money in general is higher if you invest in the last round before the IPO, if you know the company's going public. So let me give you an example really quickly. Okay. So usually when a founder starts a company, and I've humbly raised and managed over $1 billion, and I've helped my students that have started companies raise millions as well. But when you start a company, what you do is you usually get money from a high net worth investor. That's called an angel investor. Okay. You never get money from a bank, because banks are chicken. You make a mistake, they'll take everything. So you get an angel investor. Then your product, I don't know, maybe you have an MVP and good proof of concept. Then what happens is a venture capital firm like Sequoia, Kleiner Perkins, Andreessen Horowitz, all of which I've partnered with in the past, what they do is they lead the Series A. Then a year or two later, a company needs more money, Series B. Rinse, lather, repeat, C, D, sometimes E, like Palantir. Then they go public. But the later stage you invest, the higher the probability of making money, but the less money you'll make on a percent return basis. And if you have questions about that, let me know. I'm happy to go through that in a lot of detail. Thanks. Okay. All right, next question is from Haroun. First time seeing you on the call. Hope you join us again. Welcome. Who wrote, "Hi, Chris. Thank you for being you. Thank you. I got a job thanks to your LinkedIn advice. Working for a small wealth management firm with $34 million in AUM assets under management. Nicely done. Congratulations." You wrote, "We're growing our practice and believe referrals work best. But do you have other ideas? I feel door knocking and cold calls are not effective today. Let me know your thoughts." Yeah, my close rate on calls is extraordinarily high. I had at one point at 90%. So what I want you to do is this. I want you to look at the description of the webcast here, set up a call with somebody in my team, and they'll talk about what we do so I can humbly help you. And my personal goal for you, if you want, and if we work together, is in 10 years, you have your own PWM firm. And private wealth management is the best finance job you can possibly get. And here's why. And basically, for those of you that don't know what it is, it's like a retail broker for very rich people. PWM, private wealth management, is the best finance job you can get, because it's the only job really in the finance sector where you can work at a big firm like a Morgan Stanley and have a ton of your clients and leave and go to Goldman Sachs or start your own firm and take your clients with you. Yeah. I could teach you how to sell as well, or at least take your sales game next level. Next question is from Tommy, who wrote, and congratulations on the job. Tommy wrote, "What is market cap and how does it compare to market share?" Yeah, market cap means the value of a company. You take the number of outstanding shares times the stock price, okay? And that's the market cap. Okay, market share means what percent of the market do you have? So if all the companies in a market make $100 a year and you make $2 a year, then you have 2% market share. And don't ever invest in a company if the total addressable market isn't at least $20 billion. Because in the unlikely event you invest in a company that has one company that has 5% share, that's $1 billion in annual revenue. Yeah. Okay. What's your opinion on quants and the quant mathematician Paul Wilmot? I don't know Paul Wilmot. Quants make sense, but you got to be very, very long-term focused, please. Okay. And it's very hard to make money being a quant unless you work at a sophisticated hedge fund like Renaissance Technologies. Renaissance Technologies was founded by a former NSA employee in the early 80s. And he set up this unbelievable framework, an AI framework, a machine learning framework in the 80s that generates, it's a hedge fund, generates 60% gross average returns on an adjusted basis on average every year since the 1980s. Hardly anybody can figure it out though. Yeah. Yeah, and I don't recommend that you guys study computer science anymore. Okay, and I think it was Jensen Huang, the CEO founder of Nvidia, said it best. He was interviewed and he said, "Don't study computer science. Don't do that." Because AI is perfect for this. And I live here in the San Francisco Bay Area, and a lot of my clients are really worried about losing their jobs. In fact, Facebook recently announced they got rid of 6,000 engineers. Don't study engineering and don't study programming, please. Okay. Study liberal arts, and I can talk about that if you want me to. All right. Andre, thank you so much for the $20. I appreciate that. Thank you. God bless you. That's not going to me. I'll show you where it's going to. Okay. So everything I do, the only purpose I do what I do is so I can build schools. Okay. We're currently building our next school, which is Rwanda. I went there late last year. Here's my board of advisors, my students. One of the best salespeople I ever met, Greg Brown. He was the CEO of Udemy. Genefa, who's a good friend of mine, she's CMO. And then we finished one in this here is in Rwanda a couple of years ago as well with one of my students. Yeah. So God bless you. That's going to go directly to to the schools. Thank you. Excellent. Right. If you chase money, you lose your dreams. But if you chase your dreams, you don't really care about money, something amazing comes true. Your dreams come true and the money follows accidentally. Yeah. Don't make money your God. It's one of the 10 commandments. Okay. Thank you. All right. Let me see the next question here. Okay. Edry wrote, hey, Chris, hey, how did you structure asset management fees for your venture fund? In my own fund, Anchor Capital gets 1 in 20. But if we make them a killing, we'll be managing a lot more capital at 1%. Yeah, it all depends. So what happens is in my venture capital fund, as well as in my hedge fund that I started, I did usually about 2 in 20, right? At one point, my hedge fund was 1.5 in 20. But 2 in 20, what that means is this, okay? And it's the same thing for venture capital, private equity, hedge funds. It means you make a 2% annual management fee. Then you get a 20% incentive fee. And that's where these billionaires make the most of their money. And so if you manage $1 billion and it doubles, the firm makes $1 billion, but the firm only keeps 20% of that, which means $200 million. Yeah. If you manage a fund, I would probably think 1.5 to 20 is the going rate right now. It's getting more competitive. However, if you have a very big position you want to put in your fund and it's too big, right, from a risk management perspective, you can always do what I did a lot, which is this. You create a special purpose vehicle, which is kind of like a one stock or one company portfolio. You get your lawyer to do all the underwriting, obviously, and you charge 1 in 10 because there's no diversification. Yeah. So, and that's called a special purpose vehicle. Yeah. Okay. And I can humbly help you as well if you're interested in learning how to raise money. We got a product now on raising capital. So set up a call, go to the link, the description, LinkedIn profile, set up a call with my team and humbly help you out. 30-day money back guarantee. Yeah. Okay. Next up, Dong Dang, pleasure to meet you, wrote, hey, Chris, how can we get the link for your AI accounting course coming up in a month, as you mentioned earlier? Thank you. Yeah. Yeah. If you're a current client, meaning you bought my finance bootcamp program on my website per the link in the description field, or if you bought any of my Business Academy or MBA products over the years on my website, you'll get access to it for free. Yeah. Yeah. Thank you. Okay. Next question is, what did you bring to investor pitches in your fund, and what were the most challenging questions? Yeah. So what I brought, and I'm going to show you something that's really going to help you as well. It's part of my finance boot camp. Okay. This is an interview. This is an interview exercise book that I provide my students with. Okay. It's a very long course I just released. I'm so sorry I'm having technical issues here. Give me a second, please. Thanks, guys. It's fun doing these things live, eh? Yeah. So what I do is I ask you, there's a 150-page book here, okay? Exercise book where I ask you tons and tons of questions, okay? And this will help you in all aspects of your finance interviews, okay? We also use AI a lot as well. I give you tons of prompts as well. And we're just in the process of signing a contract with Udely.ai. To actually incorporate into that, which I hope is very helpful. Yeah, again, I apologize for the tech issue. Yeah. Okay, give me a second here. Now, in terms of investor pitches, yeah. So what I would always do whenever you make a presentation, okay, I don't care what kind of presentation you guys are making. I want you to make it simplistic, less is more. And Steve Jobs used to always talk about the rule of three. No more than 3 bullet points on a slide or 3 images, okay, always. And it's kind of like whenever you see beautiful pictures of the beach. There's 3 layers: sky, ocean, beach. And I'm going to give you guys a template or show you a template you guys can all use. Okay, give me 1 second. I want you to just do a search for this. Airbnb pitch deck. Airbnb came out of Y, so quite backed, and it has done incredibly well. So okay, adding my backup and muting my primary. Give me 1 second, please. Okay, and then somebody type in the field while I'm setting this up really quickly. I apologize. Somebody type in the field, please, where you lost me. What was the last thing I said? And I'll quickly sum it up, I promise you. Okay, hold on 1 second. Adding backup Blue Yeti. And I'll do it one more time over here as well. So again, somebody type very quickly. Look at the number of people I've left. Okay, all good. All right, so let me turn this on, turn that off, check. Yeah, tell me where we left off, guys. I'm so sorry. Okay, audio is back. Okay, the last 5 minutes. I'm so sorry, guys. Okay, give me a second. If somebody wants to tell me what was the last thing I said, then I'll go back and repeat those questions. Okay, investor pitches and challenging questions. Yeah. Okay, yeah. Yeah, so what I would say is failing to plan is plan to fail. You have to write a full business plan first, please. Otherwise, you can lose everything. Your money, your health, your happiness, your personal relationships. And if you want, you can write a business plan using one of my products. Just go to my website here and set up a call. I deeply apologize. We lost a ton of people there. I'm so sorry. That's the most Canadian comment ever. Sorry. Yeah. Okay. And then what you always want to do also, what I was getting at is when you come up with a presentation, it doesn't matter what kind of presentation you guys have. I don't want any slide to have more than 3 bullet points. And so what I was showing when I was doing Marcel, but what I was showing when you couldn't hear me is I don't want any presentation slide you ever give to have more than 3 bullet points per slide. Okay, less is more. This is something pioneered by Steve Jobs. Okay, and it's kind of like the beautiful pictures you see on the beach, right? You see an image that has 3 layers: sky, ocean, beach. 3 bullet points max. I can certainly help you guys if you want as well. Set up a call with me and I'll give you more advice. Thanks. Sorry about that, guys. Okay, give me 1 second here. Okay. All right, next question was, do you think a software engineer can be useful in finance? And the quick answer is this. When I worked in venture capital, we always say it's easier for an engineer to learn finance than it is for a finance person to learn engineering. So absolutely. And I can certainly help you learn that stuff as well. Yeah, because you're very analytical. Yeah. And a lot of my engineering students are trying to switch into finance now because AI is taking a lot of tech jobs. Yeah. All right. And then Derek, with respect to your business model, which I talked about when I was on mute, I apologize. You're taking my 7 or 8 hour MBA program on Udemy. I recorded 2016. Just set up a call with my team and we can help you with that as well. Thanks. Okay, next question is from Rick, who wrote, "Hey Chris, hope you had a great week. I've asked this before, but how do you see AI in 5 years? Not in terms of other jobs getting replaced, but the AI industry itself." Yeah, we're going to be so much more productive. I'm incredibly bullish on the global stock markets, especially the S&P 500, right? So what a lot of companies are doing with AI right now. So this here is an income statement I'll teach with props, okay? So a lot of miscellaneous, so whenever you're not sure where to put an item on your income statement, quite often we throw it in general administrative, okay? And so AI is going to replace a lot of this. And it goes right to the bottom line. Revenue minus expenses equals net income, okay? Also, a lot of sales and marketing jobs, not all of them, marketing especially, will be replaced by AI as well. That goes right to the bottom line. And some R&D stuff as well as how you make the product. What does that mean for you, for all of us? We all become wealthier if we invest in stocks. Massive earnings growth. And I couldn't be more bullish on the U.S. equity markets, meaning the S&P 500, over the long run. It won't be up every year, I promise you. But you will make a lot of money if you invest in ticker VOO over 20 or 30 years. It's a no-brainer if you don't have time to do due diligence. Okay. But right now, the focus with AI is how to cut expenses. Right? A lot of companies are doing it. Thousands of engineers being laid off every day around the world because of AI. I think the next leg of growth after, the fat is trimmed, so to speak, is focusing on revenue growth, meaning the top line. How is AI going to help us do that? And it's really interesting because I do a lot of calls. Like my sales force, my company almost sells 24 hours a day, 7 days a week. When I join calls, they bring me on for a follow-up call sometimes for my higher price products. People always say to me, "Are you AI?" It's the most bizarre thing. So I have to really dumb it down, which is easy for me sometimes. Yeah. All right. It's happening a lot lately. Yeah. Okay, give me 1 second here. But we always adapt. Please don't be afraid of AI. Like, try to disrupt yourself and your job before the marketplace does. Meaning, try to be way more efficient in the job you're doing if you work at a company right now, so that the productivity for you goes up tremendously, so your job is safe. Okay? Always disrupt yourself before the marketplace does. And we always adapt. Like, people were terrified. I remember back in the 1980s when I was a kid, people were terrified of Japanese automation, right, in big auto plants, And what happened was the media was worried and all that crap. The media made a big deal of it, but we adapted, man. We always do. And the same skeptics were worried about all of our jobs when Google was released back in '99. Like, what are we going to do? Google's going to do everything for us. No, we adapt. And the same moron said the same thing about Wikipedia when it was released in late 2001. We adapt. We always do. 96% of the workforce in the United States used to be farming. We adapt. We always do. And your quality of life will go up as well. Maybe we'll be working fewer days per week, as Bill Gates says. Yeah, I certainly won't be. Yeah, because I love doing what I'm doing. All right. And again, I'm very sorry about that audio issue. I had backup, though. I always have backup. If this audio is not good, let me know, and I can tweak it a little bit. Thank you. All right. Okay, next question is from the real Carlin, who wrote, "What are you drinking? It seems good." Yeah, a couple things. So my first drink I drink every day, I've been doing this since 2015. It's something called Bulletproof Coffee. It helps me with cognitive abilities so I can, think better and speak gooder and stuff. Now, Bulletproof Coffee, and please do your research on it first, okay? Because it can hurt your stomach a bit at first. Yeah, but I swear by it. It helps with cognitive abilities. What was I saying again? Oh yeah, talking about Bulletproof Coffee. So what you put in it is Bulletproof branded coffee, which doesn't have preservatives. I'm sure there's some placebo in what I'm saying. What you also put in is a little bit of MCT oil, okay, which is like coconut oil. Do a tiny bit, like 1 drop, day 1, 2 drops, day 2, get up to a tablespoon. And what you also put in, this is out there, is organic butter, grass-fed butter. And I know it sounds messed up, but for hundreds of years, people have been putting butter in their coffee or their tea to help with cognitive abilities. The only problem with doing this is I'm not hungry until like 6 p.m., right? So I got to force myself to consume, healthy stuff. So that's what this is. Now what this here is, it's just water with some flavor crystals. I try to finish this every day. We are 80% water. This helps you think better, look better, your skin better, and everything. Yeah. Okay. Give me 1 second, guys. Okay, good. All right, let me move on to the next question. Okay. Next question is from Adrian, who wrote a great book, who wrote, "What's the best way to exit a stock one owns that is doing well, especially one that has hit its target price but seems to still have legs?" Yeah. So whenever a company reports earnings, what I need you to do is this. I need you to go to the 8K, which is where the financial statements are, every single quarter. And what I want you to do is I want you to update your financial model. And Adrian, you're in my one of my courses. Just go to EMS 42, Economics Management Strategy Semester 4, class number 2, to download this, okay? And so what you're going to do is every quarter, you're going to update your financial statements. And after a company reports earnings, the reason the stock goes up, for the most part, is because earnings beat expectations, and financial analysts and investors put their numbers into their financial model, and it made their EPS go up in the future. So if a company beats, you'll notice that if a company beats earnings by 20%, quite often the stock will jump 20%. If a company misses earnings by 10%, quite often the stock will fall 10%, more or less. And the reason is because a lot of financial analysts update their financial model, and their EPS estimate changes in the future. And they're not assuming, multiple expansion or multiple compression. Their target price is still based on the same P multiple, for example. And so that's why. Yeah. So you got to update your financial statements all the time. If you find that a company has reached your 5-year price target today, then sell it. Move on. Yeah. And you always got to be unemotional about stocks, right? The most successful people I've worked for are very unemotional. And what I mean by that is this. When it comes to stocks, investments, and your startup, your company you run, I don't want you to be too happy when things go well. I'm not being a Debbie Downer here, but you know why I'm saying that. Because I don't want you to freak out when things don't go well. Be incredibly unemotional, always. And what I want you to do is before you invest in a stock or start your own company, I want you to write a full business plan, okay? On the stock or on the company. I provide you with all the templates. Then 6 or 12 months from now, after you finish that report and you own the stock or you start the company, if you start freaking out because something happened in the news that makes you worried about that stock or that startup, I want you to go back and read the document you created and tell yourself this. Okay, News flow X just occurred, and I'm worried about this investment or my company. If I went back 6 months in time, or when I wrote this report, if I had known about this new news item, X, whatever it is, that's making me freak out, would I still have invested in the stock or started this company? If the answer is yes, invest more. Okay, double down, sort of. If the answer is no, sell it, move on. Keeps you unemotional. And what I did when I worked in the hedge fund industry as well is I didn't want to bring my emotions home. And I recommend you guys do this as well. So what I used to do when I would come home, and I worked, it was very stressful at hedge funds, right, sometimes, as work is in general, especially with politics. I would come home, I walk in the front door, and Matthew, right, and this guy, these guys are in university, this guy is 15 going on 50. But Matthew, he used to come running up to me, right, in 2008, I remember this. And he would say, Daddy, did you have a good day or a bad day? And if I would say, it was only okay, he'd go, and he'd walk away. But if I said it was a good day, he'd light up like Tweety Bird and say, great, can we play baseball in the backyard? And I decided to leave my stress at work. How did I do that? Well, what I did, this is out there, is I held my front door. I was standing outside my house. I held my front door and I meditated. And I conditioned myself that whenever I touch the front door of my house, I leave all work outside, all thoughts of work and everything. Because the house is a sacred temple of love. And I didn't want that to tarnish my kids. I remember with Andrew, he went to it was a school called PTS, Peninsula Temple Shalom preschool here in the Bay Area, and there was Daddy Child Day at school breakfast, and I missed that meeting. I missed that meeting back in he was like 2 or 3 years old or something, right? And I remember to this day, why I missed that meeting with him. I remember, but do I remember what the meeting was? No. Life is too short, man. And by the time your kids are 12 years old, you already spent 90% of the time you'll ever spend with them. Prioritize family, always. Yeah, especially over friends. Friends come and go. Yeah, and don't ever tell any friends, I don't care how close they are to you, any of your secrets. Yeah, be paranoid. I can go into more detail on that. If you have any friends that are very negative, I want you to cut them off, right? They're gone. They shouldn't be in your life at all, right? So I'm gonna get a prop here and explain this, right? So when I was younger, you know, if I had a friend that hurt my confidence and pissed me off and was critical of me, right? I'd be like, okay, that's fine. I'll let it slide. 3 times you're out, right? So 3 times you're out. Now it's 1 time, you're gone. There's no need for negativity in your life. I only want you to surround yourself with very positive people. And as Les Brown said, someone else's opinion of you does not have to become your reality. Okay. Let me move on to questions. But I'm having fun as I always do. Okay. Next question is, do you invest in stocks that pay dividends? I do. I've got a good mix of growth and value, but much more growth. So most people that study finance in school, like I did my MBA in finance at Columbia University, and Warren Buffett actually went there too, and he actually taught one of my classes, which was a real treat. But when you study finance in university, or even online, you're typically a value investor because you're taught buy low, sell high, buy stocks that are cheap, yada, yada. But I learned that's not the best way to make money. Yeah, you can make money in the long run, like Warren Buffett does. But if you want to make a fortune, like 5 by 5, 500% return within 5 years, you got to invest in stocks that don't have dividends, right? Because they're growing faster, they're reinvesting every penny. And I want you to invest in companies. After you create your financial model, I can certainly help you with my daily Zoom calls with my clients. But after you create your financial model, I want you to look at your PE multiple price target 5 years from now. Yeah. That's how this guy made a fortune. You got to be long-term focused. And a lot of people think that hedge funds are day traders. The best hedge funds are not. They're fundamental investors, and they make 3 to 5 year bets, even if they don't own those stocks for 3 to 5 years. And every year in a hedge fund or a personal portfolio, your best investments and your return your portfolio comes down to 2, maybe 3 stocks that you've done a lot of work on. Everything else is noise and a waste of time. Yeah. Okay. Daniels wrote a question about your MBA program. It isn't recognized as an MBA program by the educational system. Question. If so, what recognition? How does it compare to MBA programs recognized? Yeah, I will never, ever, ever do government accreditation. Right? I don't want a government telling me what I can and can't teach. When I graduated from Columbia with an MBA in finance, in my start class at Goldman Sachs, myself and all my Columbia and Harvard Business School friends, we all came to the conclusion that 2/3 of HBS is BS. They don't teach you jack that's going to make you successful in life. A traditional MBA does not teach you the following: how to manage your own personal money. They might teach you some theoretical crap about DCF and how to manage other people's money. Traditional MBA does not also teach how to network. That's the most important skill in business. They also don't teach you how to sell. They don't teach you how to interview. They don't teach you how to give a presentation. They don't teach you AI. They don't teach you social media. All that stuff I just mentioned, I teach you, and much, much more. So everything I teach you is very practical, okay? Everything I teach you, you can use immediately. I give you all the templates you need. Plus, I give you consulting. I help you out as well. I will never allow any government organization to make me be accredited, because I don't want to teach you bogus stuff that they want me to teach, like supply and demand graphs that nobody uses in the real world unless you're an economist. Yeah. So I'll never do accreditation, ever, 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 ever. I'm not a degree mill. I've had thousands of people graduate from my program. In fact, I have a 3-day graduation event this September, which anybody, silver, gold, platinum, or any of their products can come to. It's also a networking event. And the way to learn more about it, it's a 3-day event. I'd love to meet you guys. I give one-on-ones to anybody that comes for free. The way to learn about it is go to my website. I think it's here. Yeah, go to my website, and I'm going to clean this up. Customer login, and then go right here to in-person graduation. Or you can go to harounventures.com/2025 graduation. It's a 3-day event, okay? Great networking event as well. We launched this program last decade. We go to Napa Valley as well, and it's a lot of fun. So check it out if you guys want to attend. Yeah. All right. 2/3 of HBS is BS. Harvard Business School, not Haroun Business School. Yeah. And I've had students halfway through my MBA program and my Business Academy stuff on my website that have gotten jobs that Harvard Business School students got. I have one guy named Vicente Correa. Halfway through my program, he has an undergrad from a non-target school, and he worked for KPMG for like 2 or 3 years. I helped him to get a job in investment bank in New York City, and his start class was with MBA students, Harvard, etc. You can look them up if you want. Yeah, I've also had a lot of other success stories, humbly, with students of mine that have started their own companies, raised $10 million within 6 months, their own finance companies. I've helped people get jobs in venture capital, private equity, yada, yada, yada. Yeah. And everything I do has a 30-day 100% money-back guarantee, and it's less than 1/10 the cost of an MBA, which is a waste. Yeah. Okay, next question from Adre is, how did you effectively manage selling positions at a high RSI while minimizing tax exposure during your hedge fund days? And how did you play this into your performance reviews? Yeah. So we didn't really worry as much about tax when we were running the funds. And here's the reason. So in my hedge fund, I had what's called a master feeder. Okay, and I help a lot of clients do this too. I have clients that started hedge funds. I have clients that started investment banks, private equity firms, etc. But the way you set it up is as follows. You get a securities lawyer, and you set up a master vehicle, which is your fund here in the United States, for example. Then what feeds into that are 2 entities, the onshore entity and the offshore entity. Okay, the offshore entity, I always recommend using British Virgin Islands, BVI, because it's cheaper in Caymans. Okay, and your securities lawyer will take care of all that stuff. And a lot of my investors, like for example, European investors, like big firms like ABN AMRO, which I think had $5 million in my fund in 2008, they invest through my offshore fund. And the reason is because they don't want to be subject to U.S. taxes. And you never, ever give tax advice, ever. And everybody in this call, I'm going to get down on my knees because I care tremendously. Hey there. Please don't do taxes yourself. Get an accountant. Doing your own taxes is like doing surgery on yourself. Accounting professions exist, CPA for example, because the tax code changes all the time. New government administrations get elected, municipal, federal, statewide, or provincial-wide, and they change the rules. A good accountant will get you tons of tax breaks. And I promise you, if you use some crazy software product, I don't care how good you think it is, it's not going to get you as much money back or be as good as a great accountant. Please use an accountant. If you start a company, I want the accountant that does your personal taxes do your business. I have 2 credit cards, personal card, business card. If I think something is a business expense, I put it on business and vice versa. Then at the end of the year, my accountant looks at both and says, no, that should be there and that should be there. You will save a fortune. So how do you find a good accountant? Well, there's no Yelp for accounts online. What you have to do is this. Talk to your successful aunt or uncle or parent or successful friend or successful colleague at work and ask them to introduce you to their accountant. I promise you the investment, a couple $100, whatever it is, will be worth it. You'll have massive return on investment. This is why a lot of very wealthy people, they hire tax accountants, right? As well as tax lawyers. And I paid a tax lawyer like $900 an hour. Is crazy. I hated it. I wanted him to talk faster always, but he saved me a ton. Yeah. Like this room, for example, my company rents this room from me. Yeah. And my accountant told me all about that. And you get R&D tax credits too. But talk to an accountant. Trust me on this. Okay. All right, next up, Rick wrote, after finding index funds or other ETFs on sites like etfdatabase.com, etfdb.com, how did you do your due diligence to ensure they will get exceptional returns? And how do you pick one ETF out of the hundreds of thousands? Yeah, a couple things. Number one, I want you to look at 3 things actually. And let me show you. And I'll show you an example of my go-to ETF where I put money. Do your research first. I'll show you where I put my money when I'm not sure where to put my money. Cash is trash. So I usually buy ticker VOO, okay? And I love to invest in ETFs that start with the letter V. I know it sounds silly because they're Vanguard, right? For the most part, right? Vanguard is #1 ETF company on the planet. They've got usually the lowest fees as well. So here's what you're going to do, okay? Step 1, you're going to look at the expense ratio, okay? If 2 funds are similar, buy the one that has the lowest expense ratio. So what this means here, and this ETF, ticker VOO, is the S&P 500. So what this expense ratio here means is for every $100 you invest every year, you're only paying 3 pennies in fees. Do you know what it is in a mutual fund? A lot of times it's 500 pennies with hidden fees. Mutual funds are a scam. Don't touch them. That's number 1. Number 2, I want you to look at the average daily volume and multiply it by 10%. That's the maximum position size you can have in that ETF. Obviously, this one here is very liquid. You don't have to worry about that. But illiquid stocks own you in a down market rather than vice versa. Number 3, or 3th, as my son Andrew used to say, I want you to read the prospectus on this. Now, the prospectus, it's like investing in an IPO. Never invest in an IPO without reading the S1 document. Never invest in a company without reading their 10K. The prospectus tells you all the risks, okay? So what you'll do is this. Just do a search, or go to Vanguard's website, okay? Or just do get prospectus for paste. Okay, here it is here. And then what you're going to do is you're going to scroll down here, and then you're going to read the prospectus, which is somewhere here. Okay, hold on 1 second. This is actually kind of like a prospectus itself, because all these details are here. Here it is. View prospectus and reports. Great. All right. Summary prospectus, annual report. I want you to read both of these, annual report and summary prospectus. Go to summary prospectus first. Okay. I want you to read every word of this, okay? Every word, okay? All the fees, everything, okay? And I also want you to read all the fund literature on the annual reports. Annual reports called a 10K, etc. So just go through that prospectus and the 10K, please. Thanks. And you, the amazing thing is this, guys. You have the exact same access to information at the exact same time as all the top hedge funds and richest people in the world. It's called Regulation FD, or fair disclosure. Elliot Spitzer created this back in 2002. And there's no hedge fund that has more edge than you. And if all you do is you take my templates and update them, I teach you exactly how hedge funds and professional money managers invest. I don't teach theory. I teach practical stuff. And I don't ever want you to rely on me or anybody on television to tell you what to buy. Now, when people get interviewed on television, like fund managers, people that manage stocks, or CEOs, don't listen to them because they're the best salespeople. That's how they got to where they are. Do your own research, and I provide you with all the tools. And I humbly do this. And I love to teach with props, as you all know. Ugh. This is not going to work in this camera angle, but I'm going there anyway. Okay. Teach a person to fish, they'll eat for it. Give a person a fish, they'll eat for a day. Teach a person to fish, they'll eat for a lifetime. That was the biggest epic prop failure I've ever seen. But I love to teach with props. Oh, my CMO wants me to ask this. Please click the like button and subscribe. Thanks. Okay. All right, give me 1 second here. How do you generally invest in non-stock securities like bonds and commodities? How do you do research on them? Yeah, so I don't do that much research on commodities, right? So for example, gold, ticker GLD. When I'm really worried, 5% of my portfolio is always in ticker GLD. That's gold, right? And the fee there is, I think it's just under 50 basis points, but it's real gold, okay? And I think longer term, I don't invest in oil. Because I think oil, there's a famous Saudi Aramco executive years ago that said the Stone Age did not end because they ran out of stones. I think oil's a loser long-term investment. I'm always a very long-term investor. Yeah. I will invest in silver if I think that the global economy is in a massive recession. Because silver, obviously, there's a lot of inputs into industrial uses, and there's somewhat of a correlation sometimes to gold. Yeah. In terms of bonds, you can always go to my YouTube channel, do a search on bonds, and I've got plenty of videos that explain that in a lot of detail. I generally like to invest in AAA rated bonds. And what I also buy is this, okay? And this is a really good investment. Give me 1 second. So let me go to iShares Direct. Okay, give me 1 second. iShares, not iShares, sorry, treasurydirect.gov. Give me 1 second. So sorry, guys. This is worth it, though, I promise you. Here it is. Good. All right, great. All right. So what you can do is you can invest in iShares, okay? And let me show you. It's a Series I savings bond, okay? And this is actually, you're never going to lose money on this, okay? And I think this only works for U.S. investors. You can read all this stuff here, but you can invest up to $10,000 per year, okay? And the fees are almost nothing, okay? Almost nothing if you owe them longer term, okay? And the way it works is if you invest in this, right? And the reason you've never heard of this is because only the government can sell it, hence the name treasurydirect.gov. Big firms like JP Morgan, Goldman Sachs are not allowed to sell this. So there's no marketing done for this. So you look here and talk to your accountant about buying this in a tax protected account, okay? So what happens is you buy this, you put in 10 grand per year, okay? And you're going to make a 4% return, okay? I know it's not as sexy as owning Nvidia or AI stocks, but I think it's good to own this too. And what happens is interest rates here reset every 6 months, right? So on October 31st, if inflation is a bigger concern than today, this will go up. When I first invested, it was like close to 10%. Yeah, you will not lose money on it either, even if we're in a massive deflationary market. So this, I think, is the best bond to take a look at. Do your own due diligence, please. Read the prospectus and all that good stuff. Okay. Next question is from Adre, who wrote, how often did you roll your own earnings back into your own venture fund? And how important was this for investors to see so they can invest in your fund? A lot. The best investment you'll ever make is in yourself. Yeah, I talk about investing in stocks, bonds, commodities, and stuff. But every penny you invest in your own business, right? If you've written a good business plan, I'm here to help you. But every penny you invest in your own business, I don't want you to think of it as you getting 100% upside in 5 years. I want you to think of it as getting thousands and thousands of percent upside within a decade, right? The best investment you can make is in education and in yourself. Yeah. So I would reinvest a lot always. And I still do it now. Yeah. And quite often when you're raising money for a company, right, for your own company, what sophisticated investors, high net worth investors, venture capital firms will ask you is this: are your parents investing, right? Or are your friends investing? Or how much have you invested yourself? And when I used to invest in companies, I used to partner with one of the most sophisticated angel investors in history, Saeed Amidi here. And when we used to interview people to invest in, he'd always ask one question. And if the entrepreneur didn't answer it the right way, he wouldn't invest. And that question is this: do you have a plan B? And if the entrepreneur founder of the startup said, yeah, I'll go and get my MBA, or I don't know, go back to law school or go work at IBM, he wouldn't invest. The answer we're looking for is, I am all in. And the jockey's always more important than the horse. The most important thing you can analyze before investing in any company is the management team. All right, let me move on to the next question. Anything wrote, hey Chris, what do you think is the best programming language in the current years? Python right now. And I wouldn't focus on that as your primary job because AI is going to take that away from you. But in my programs, you get access to my complete Python course where I teach you, along with my CTO, Luca Anderson, how to program Python from scratch in a fun way using lots of prompts. Yeah, lots of objects, right? So I teach you object-oriented programming with prompts like this. When you meet me this year at the 3-day graduation networking event, I'm a very tiny man with the worst dad humor ever. Okay. And I repeat that joke, I know. That's dad humor. It's what we do, man. All right, moving on to Rick, who wrote, Ashish here, okay. For some reason, I can't send messages in my other account. You should have at least 20 positions in your portfolio. Does that mean 20 is ideal or more than 20 is? Also, what point does it get over diversified? Yeah, I wouldn't have more than 20 stocks. Just because there's diminishing returns the more you have after that, right? And there's the efficiency market frontier, and there's a lot of theoretical crap that proves that. But just accept 20. Yeah. Okay. Next up, Christian wrote, what is the importance of whether revenue growth comes from pricing power versus increased sales quantity? Okay, so you're saying volume up or price up. I like volume up, right? Because if I just look at price up, it could be because of inflation. So if you're going to look at price up, make sure it grows more than the price of inflation. Now, if you're ever doing due diligence on a company, meaning creating a financial model, and you don't know what the driver is, right? For example, if you invest in Exxon, the number one driver is price of oil. If you invest in Starbucks, the number one driver is same-store sales. If you don't know what the driver is, then just come to this conclusion. If I see prices going up and volume going up, then it's good investment, among many other things, of course. Okay. And then next question is, what data sets are you comparing for regression analysis on a person? I have a general idea, but looking at insights anyway. Yeah. So what you can do is what's called behavioral finance. And you can look at the stock price of a company over the past decade. And you can look at insider buying and selling over the past decade. And see if there is a good or a high correlation, like 70% plus correlation. You got to do a regression analysis. All the data is available for you to do it. I teach you in my finance program on my website exactly how to do that. I'll give you a couple examples. So Bobby Kotick, who I met with many times, he's the CEO founder of Activision. Funny guy too. He's in the movie Moneyball. Brad Pitt's boss in it. But I met with him lots of times when Activision was publicly traded. And I noticed, and I asked him about this too in a public forum. I asked him, how should we think about investing in your company, given the fact you're selling a lot of shares? And he'd always come up with some silly answer like, well, my wife, she has expensive taste. What do you want me to do? But I found out that there was a very high correlation between the stock price of Activision, ticker ATVI, before Microsoft bought it. There's a high correlation between the stock price and insider buying and selling from him. You have access to the data, you can do this. The same thing with Elon Musk. So in Q1 of 2020, when everybody's freaking out about COVID, and I was buying, which you should do, what Elon Musk did, because he's unemotional, or was more unemotional back then, he bought a ton of shares in Tesla, and it's publicly disclosed. And things were so cray-cray in Q1 of 2020 that the futures price of oil went to negative $40 at one point. It was crazy. He then sold those shares he bought in the fall of 2021 when the market temporarily peaked. You have the same access to data as professional investors do, and you can run regression analysis as well. Yeah, and regression analysis is a subset of ML, machine learning, which is a subset of AI. We teach all that stuff, AI, machine learning, et cetera, and so much more in our programs. Okay. What are the books that you have created using your book template? Yeah, I've got them here. Let's see. I created this one. I created a networking book, a management book, and tons of others. And what I recommend you guys do is this. I learned this from Gary Vaynerchuk. And Gary V, if you don't know him, is probably the best social media guy in history, right? He's abrasive, but I love him because he's transparent. But what he told me to do, and all of us, okay, is this. Repurpose content. What does that mean? Well, in this weekly video that I do, the best questions asked are repurposed in YouTube Shorts, TikToks, Instagram videos, etc. By the same token, I wrote 100 articles over the course of 2 years on LinkedIn, and I repurposed it into a book. And you guys can do the same as well. A lot of my clients do. What's the benefit of doing that? Well, you walk into a job interview or an informational meeting or a meeting with a potential client. You give them your book. Who does that? Makes you look different, helps you stand out, makes you unique as well. And if you think that's too much work, and I say this with all my heart, I ask you this. How badly do you want that job or that customer? Now, I'm going to give you the template for this for free. I'm not going to even ask for your email. So all you have to do is go to harounventures.com/writebook. All one word. Okay? And that's lowercase. Okay, so harounventures.com/writebook. Take a screen print. And then you click here to download the template. Okay, and you download it in Microsoft Word. And there's one page of instructions to tell you how to publish it for free, no expenses, on Amazon Kindle, Amazon Print, and ACX, which is audible.com. And here's a template here. Just fill it in, and then you're going to right-click on the table of contents to repaginate. It's that simple. Repurpose your content, folks. All right. Next question is, how did you manage to convince the board to bring you on when you started your venture fund and portfolio companies? Yeah. So what you're doing is you're trying to prove to the founder of the company you want to invest in, that you can add value. So I'll give you an example. Okay, one of the venture capital funds I worked at, Sequoia led the Series A in a company called Cohesity, and I was competing to lead the Series B, and I was on the board for the Series B, and this was right before I started my company. So what I did was this. I sat down with, and you can reach out to Mohit and ask him, but I sat down and I went to San Diego for this meeting because I was meeting with, let's see here, and this is my dummy account here, Mohit Aaron. I sat down with Mohit Aaron, and we partnered with Qualcomm Ventures. That's why I was in San Diego. And what I did was during the meeting, I sold myself by saying I can help to get you customers. During the meeting, I introduced them to the top person at Wells Fargo and a couple other people. I added tremendous value, and this helped us to get the deal. And the way you got to think of yourself on a board is you got to think of yourself as a prosthetic extension of the management team. This guy's great too. He started a company called Nutanix. And by the way, when you guys create your LinkedIn profile, I want you to write tons of recommendations, and I can help you write your entire LinkedIn profile if you join my program. See the link in the description of this video. But I was doing due diligence of him back in 2015 before we invested. And I read he had like 25 or so recommendations, which are unbelievable. People read these things. I want you to get tons of recommendations, please. I promise you this will help you in your career materially. Okay. Next question is, what % of your monthly income should ideally be in investments? I know Warren Buffett's famous quote, but I want to get a practical idea or goal. Yeah, Warren Buffett said you want to spend what is left after saving instead of saving what is left after spending. What I want you to do is your number one focus should be max out your 401k. Okay, that's your retirement savings program. If you're in a country other than the United States, do a search for what is the 401k equivalent in my country. Okay, maximize that every month if you can. Okay, number one. That's about, it's over 20 grand per year if you can do it. Times are tough, we can't always do it. Next thing I want you to do is I want money to come out for your educational savings account, 509 plan for your kids. Okay, as much as you can. Okay, I want that to all go into your favorite ETFs or stocks. I want it taken out of your paycheck before you get the money. Out of sight is out of mind. That's what I recommend. So as much as you can. Yeah. Okay. Okay. Next up, you say paying rent is exponentially worse than owning a house in the long term. The same logic. How would you compare public transport versus personal transport, like a car? I love the way you think. Yeah. If it saves you time, then I wouldn't own a car. Yeah. Because the second you buy a car, it goes down by 30% depreciation. The second you drive it off the lot. So if you can Uber everywhere, because short trips, or use public transportation everywhere, that's a much better investment. So if you're looking at buying a car, and I'll just make this up. Say it's a $100,000 car, just for simplicity, right? And let's say that you're going to own it over 5 years and it's going to depreciate down to a value of, I don't know, 40,000. So you're losing 60 grand. You got to calculate also what your gas expenses are. But the 60 grand, you got to calculate, well, if I spend 5 grand every single year for 5 years on Ubers instead of getting a car, that's 25 grand. 60 grand minus 25 grand, big savings, $35,000 savings. Yeah. And in my programs, you can learn more on my website. Go to the description of this video, set up a call with us. But in my programs, I teach you how to save way more as well. Yeah. Chick, it's been a while. How are you? You wrote Saint Haroun. No, Saint Chick. Good to see you. Thanks for releasing the course. If you're looking for a finance TV show to review, try Industry. It's so funny you mention it. I get that a lot, and I'm doing that as well. I'll be doing that as well. Yeah, I get that a lot. For those of you who haven't watched Industry, it's not as good as Billions. It's based on an investment bank in the United Kingdom. It's not that realistic, but it's fun. I will do that. Thank you for the feedback. Next question is, what are the most important business skills to learn? Number 1 is networking. Okay, number 1 is networking. Number 2 is sales. Your network is your net worth. Relationships are more important than product knowledge. My success rate, humbly, my success rate in getting meetings with people I've never met before using my networking methodology I teach has always been 95%. And I don't say that to impress you. Rather, I say it to impress by the fact you can do it. It's crucial because every time you see a job opening, you see online, you apply for it. You literally statistically have a 1 in 250 chance of getting the job. Who gets the job? It's somebody that knows someone at the company. So that's what we do. I help you with networking meetings. You join my program. I don't care if it's my finance bootcamp, my business academy, whatever it is. Step 1, we help you make an incredible LinkedIn profile. Step 2, we help you with recommendations on your profile as well. Okay, which certain people are going to write that you know. Step 3, we teach you how to network and set up a ton of informational meetings. Step 4, we teach you how to create and prepare one-page templates to bring to all of your networking meetings. Let me give you an example. So I have a lot of people in my finance bootcamp program, which you can click on the link in the description, set up a meeting with us to learn more. And people want my finance bootcamp program. What I do with them is this. I find out who they're interviewing with. I train them how to interview. Okay. And then what I do is, from a psychology perspective, we spend a lot of time thinking about the questions that the people might ask them. So, for example, if you're interviewing with a hedge fund in New York City, and you're interviewing with an analyst there that covers the healthcare sector, well, by law, anybody that manages over $100 million, they have to disclose every single quarter what they own. So what we do is we look at what they own, and I help my clients do one-page write-ups on their top 10 healthcare positions. Because you're going to be sitting in the meeting and you're going to be chit-chatting, bonding. I teach all that stuff, how to interview, how to answer questions. And they're going to ask you questions. What do you think they're going to ask you about? The healthcare analyst. Probably their holdings. And so what you're going to say is this: I've actually done a lot of due diligence on that. Is it okay if I pull out a one-pager on that company? And they're like, yeah, sure. Nobody does that. Okay, and you're going to put, and the way the one-pager is going to look like is this. I'll show you right here, okay? And I have this not just for finance stuff, but for everything, okay? So the one-pager, and this is dummy data here, is going to look like this, okay, on a healthcare company, okay? And you're going to put your name at the bottom as well. You're going to talk about, the fundamentals, valuation, technical analysis, your target price, et cetera, okay? Include technicals if it's a hedge fund only. And then they're going to ask you follow-up questions. And then you say, no problem, I've actually thought of that. Is it okay if I pull up my financial model on that healthcare company? They're like, sure. Nobody does that. You pull it out, you run through with them, and I help you make that financial model and the write-ups as well. Then they're going to ask you about one of the other 10 companies. You're going to have write-ups in every single one. Every battle is won before it's been fought. I promise you this works. Now, when I worked at Goldman Sachs and some of the top hedge funds, Citadel and others, what I did was I conducted over 1,000 interviews in my career. What does that mean? That means an average of 1 interview per week for about 20 years. I know how to help you get a job. I don't give a damn if you didn't go to a target school or if you don't have an education. I will walk through walls to help you as well. Yeah. So every battle is won before it's been fought. Yeah. And that's actually what I did my Citadel interview when I got a job there back in, I think it was 2004. Yeah. Okay. All right, who was your fund administrator, risk manager, and other key positions? How did you hire them, and what did their comp look like? Equity. Yeah, I gave away equity to my employees, right? Performance-based, right? Up to like 5% for my key analysts. I also paid a base of, I think it was like 150. In terms of fund management structure, so my custodian was Goldman Sachs Execution and Clearing. My prime broker at first was BTIG. And then we had other ones as well because we wanted them to compete with each other like Jeffries, and we got the commission structure down to less than a penny. Yeah, it was amazing. In terms of the fund administrator, Alps Price Meadows. Yeah. And then the accounting firm we used was Harb Levy. My service provider for accounting was the Services Law Group, which is run by Jim Grand here in the Bay Area, and he helped me with FINRA and set up my offshore bank as well. Yeah. Okay. And risk management, I calculated myself, but what we were able to do with our prime brokerage firms is we were able to run DV01 reports overnight, which means if interest rates change by 1 basis point, how would that impact our portfolio, et cetera? Yeah. And your prime broker will help you always with all of the investment analysis reports. Yeah. And also they're great for stock loan, obviously borrowing shares. Yeah. For shorting. Yeah. And if you want more information on that, you can do a search on the word hedge fund on my YouTube video. I've done plenty of videos on that. Okay. Including how to start a hedge fund. Okay. Okay, give me 1 second, guys. All right, next question is, okay, I already answered that one. Adre wrote, what are the biggest warnings you have for analyzing 20 Fs for Chinese companies? So 20 Fs are not familiar. They're annual reports, kind of like 10Ks, but for companies that are not domiciled in the United States. So the best way for me to answer that is this, and I don't want that position or any position to be more than 5% equity, maybe even less. So what you're going to do is, this is best explained with my forensic financial statement analysis using AI course. Okay, and again, this will be out. I'm going to try next week or week after, out in July. Okay, what you're going to do is you're going to analyze the audit reports. Okay, and I don't ever want you to invest in a company anywhere in the world if they don't have the following 4 auditors as their auditor of the financial statements, which blesses the financials. Ready? PwC, KPMG, Deloitte, and Ernst & Young. No matter what. No matter what. Okay? What I also want you to do is I want you to analyze the footnotes to death, which I help you do, and analyze the income statement to death. And there are so many exercises in here as well where we use AI. And what comes out of this, it works for that Chinese company or any company really, right? Is a 1-page due diligence report where you can score everything, okay? And you can print this out and bring it to interviews, and a 24-page due diligence report, okay? Where you can analyze all this stuff here, right? It's endless, yeah. And then also when you score things, I allow you to change the score weighting as well. And this is explained in a lot more detail in the course, which again comes out next month. Yeah. What I'm about to say is not a knock on China, but I'm just going to say from experience, I've been very burned from an accounting perspective investing in Chinese companies, right? Not the well-known ones like Baidu, but others. Yeah. So I want you to do a forensic accounting review using that spreadsheet that I'm going to release in a course within a couple of weeks. If you want to learn more and join my program before I release that course, go to the link in the description of this field and set up a call. Thanks. Okay. All right, Manas, how are you from Calcutta? Manas wrote, humbly, good morning, my dear mentor. Hope all is well. Let's go. Good to see you, brother. Okay. Next question is, what are some tips you would give to write good? Yeah. Couple things. Okay, so I have my own column in Forbes magazine. That was me showing off. Sorry. I've made so many mistakes in my life, though. I also have my own column in Inc. magazine years ago. And my editors have always told me this. Chris, stop writing like you're trying to write for The Economist. I want you, Chris, to write at an 8th grade level, which is easy because that's my maturity. But it's true. Write at an 8th grade level. Make it simple to understand. I'm not saying talk down to your audience. But a lot of 8th graders are pretty sophisticated too. Because a lot of people that will read in second languages as well. Right at 8th grade level. Another thing is this. Never have more than 3 sentences per paragraph for the rest of your life. It's overwhelming. And what I found based on our research is, especially with the younger generation, who I love, the attention span is not the same it used to be. Okay, the days of reading 5,000-word Vanity Fair editorials are in the past. I don't like that publication. It's way too left-wing. Other things I can tell you is you can always use ChatGPT to help you with grammar. Do not write articles entirely in ChatGPT. Here's why. The copyright code has not been set yet. There's no real legal precedent. And some of the stuff that is written in ChatGPT might be pulled from another source, and you can get in trouble for it longer term. In fact, with my Forbes column, before I submit an article, I have to click a checkbox that said, I did not use AI to write this. You can use it for idea generation if you want. Now, when writing an article, the 2 most important things are this. People judge a book by its cover. So the title, okay, as well as the image. And you can always go to ChatGPT, paste in your article, and say, here's my article, create 20 really clickable titles for me. Okay. And then when it comes to the image, it's got to be something very colorful and, I don't know, clickable. It's like you go to a bookstore, which one are you going to click? Or which one are you going to buy, which book? Or you take your kid, take your kid to the grocery store and ask them to look at the cereal boxes. Which one are they going to choose? Usually it's the one with bright colors. Yeah. And if you want to learn how to make incredible thumbnails or images, and my dad taught me this when I was younger. He said, Chris, only take advice from successful people. So we're going to take advice from Mr. Beast. Look at Mr. Beast's thumbnails. That will give you an idea of the thumbnail to make. Okay, it's really important. Optics matter. And Mr. Beast, before he actually makes a video, he thinks of making the thumbnail first and the title. Yeah. Okay, we don't have that much time left. For those of you in my subscription programs, you can learn about my website. Look at the description here. We've got a 3.5-hour weekly call starting at 10 a.m. That's in 13 minutes. If you have questions, you can ask there. It's on Zoom. You can share documents. I can help you mock interview models, whatever you want. I'm here to support you. Okay. Question, what do you make of Zoran Mamdani victory? Yeah. That's New York's the new mayor of New York. Yeah. Yeah. He's incredibly well spoken. And confidence leads to perceived competence. Let me say that again. Confidence leads to perceived competence. Now, I do a lot of corporate training. I presented to all employees of a semiconductor company called Mayoral here in the Bay Area multiple times. And one of the C-level executives said during my presentation, said that sometimes we decide which vendor to buy from based on how confident they seem during their presentation. Confidence leads to perceived competence. Fake it till you make it. I don't know. Yeah. What I don't like about him is I'm worried that he's way too left-wing. But we'll see. Yeah. Okay. But he speaks gooder than me. All right, next question from Andre is, how often did you scan the largest losers of the day for your investment ideas during your hedge fund days? Every single day. You know, I'd run massive risk management reports every night. Yeah. And I'd always look at my gross and net exposure. And I can go into more detail on that as well. And my beta exposure. Yeah. Yeah. Okay, next question. Manas wrote, when fund managers like Cathie Wood lose money, like she does humbly, how do they remain clients? Her ETF peaked at 100. Yeah. So she's massively underperforming. Do you know why people invest in Cathie Wood? Because she's a great presenter. Confidence leads to perceived competence. That's it. And she brilliantly leverages the media too. Just like Mark Benioff. Mark Benioff, who's the brilliant co-founder, I've met him a number of times, the brilliant founder, I should say, of Salesforce.com, largest employer here in the Bay Area. He has a book. I think it's called 100 Tips or something like that. Just find his books. And one of his tips is this. Network with the 50 most important people in the media in your sector so that you can get free publicity. And he's controversial, but tasteful. So years ago, when he left Oracle back in 1999 as the youngest vice president at Oracle when he was 26, but when he left Oracle to start Salesforce.com, his logo was software with a line through it. He was controversial. And this got him a lot of airtime on shows like Mad Money, Jim Cramer's show, and many other publications. And I remember when I worked at Goldman Sachs and when I worked in the hedge fund industry, I'd see him at conferences on panels all the time, be very controversial, saying software is dead. And back then people were like, WTF? Why the face? What does that mean? And he would always say, well, why would you download software when you can run it on the internet? And he was early. And you have to be controversial but tasteful as well. So for me, I interview a lot with the media and stuff. What I say is, 2/3 of HBS is BS, right? But it's fun, right? But you do have to be tasteful too, right? Like Elon Musk is really good at it, but sometimes he is not that tasteful. But have you ever seen a Tesla commercial? Neither have I. Controversy works. Okay. All right. Anish wrote, Chris, we have Chris hiring us before GTA 6. I'll try to help if it's something like open source contribution. Good luck for the scaling, Chris. Thank you. I appreciate it. Yeah, and I've had offers for people to buy my company. I turn them down. Yeah, we're going for it, man. We're going for it. I gotta make a ton of money if I'm gonna build these 1,000 schools in Africa. I'm gonna do it. Yeah. I feel like, and I love this feeling. I feel like I'm standing on the edge of a cliff whenever I have a new goal in life. I'm standing on the edge of a cliff. And I threw a bunch of airplane parts off. And I jump. And I have to assemble the airplane before I land. I love taking risk. I love challenging myself as well. And as James Cameron, the brilliant Canadian, the brilliant writer, director, producer of Titanic and Avatar said, if you set your goals really high and you fail, you still fail above everyone else's expectations. But don't give a damn what people think. So for me, it was interesting. When I worked in venture capital, a lot of people wanted to meet me, all that stuff. I go to parties here in the Bay Area, where I'd meet with Reed Hastings and tons of people, whatever. People wanted to talk to me. And then the second I became a teacher, people were like, they didn't want to talk to me. I don't care. You got to tell yourself, I don't give a damn what people think of me or my choices in life. And my dad used to say, those who can't do, teach. And those who can't teach gym class. And that's true. Those who can't teach gym class. I'm just kidding. I love teachers. That was a joke. Okay. And then Ilya wrote, with respect to my throat before, you said you need natural Ukrainian honey. Thank you so much. And you wrote, oh, good. Okay, you might be coming to my event this September. You're going to bring some for me, or if you do come. Yeah, I'd love that. Thank you. A lot of people, before they go to certain countries, what they'll do is they'll eat honey from that country for a month before they arrive. Because some people believe that bees, which are unbelievable creatures, that bees create antioxidants that will neutralize you so you don't get sick in that country. I haven't done the research, but it's interesting. Yeah. Honey never goes bad either. All right, next question is, Manas wrote, Peter Lynch used to say, boring business makes more money, somehow at least consistently, how and why, and can you give 5 examples of boring businesses? Thank you so much. Yeah, I never invest in companies I don't find exciting. Yeah. But I'm more of a growth investor. All right, next up, Jiaming. Hey, how are you? Wrote, hi, Chris, great to see you. Always great to see you too, brother. Okay, so Jiaming, who's going to Purdue University, is passionate about accounting, good guy, wrote, I'm growing my LinkedIn network, and I want to make better connections. Also, between the VIX and the RSI, which is more important for timing investing? Yeah, good job on growing your LinkedIn followers. I remember when I first met you a couple weeks ago, it was 16. Now I think you're over 100. And this gives you more social proof, everybody. I want you guys to have tons of LinkedIn followers or connections. And the easiest way to do that is to, just find people that went to your school or worked at your company and just connect with everybody. It gives you social proof. Optics matter. Yeah. In terms of what do I monitor more closely, the VIX or the RSI? RSI for single stocks, right? After I look at fundamentals and valuation. The VIX I look at just from a macro perspective. So if the VIX is ever, and I got to wrap this up in a minute. If the VIX is ever over 60, 70, or 80, just buy market. It's going to feel like the world's ending, but just buy it. Because things are never as bad as we think. And also things are never as good as we think. And I back tested this and I put my reputation on the line. If the VIX is above 70 or 80, just buy stocks. you'll make a fortune. And VIX is a measure of volatility. I've talked about it a lot in the past. Great. And I do have to wrap this call up in a second. I see there's tons more questions. You can either ask them next week on this weekly, or you can ask me on our 3.5-hour Zoom call that's starting at 10 a.m. Pacific time for my customers. And if you're one of my students, and go to the link in the description here for my newer products, you get access to me Monday, Tuesday, Wednesday, Thursday, Friday in small group Zoom meetings where I answer questions for you. I mock interview, or I help you with documents, financial models, templates, whatever it is. And also, you get access to me in one-on-ones. Okay, that's Mondays through Saturdays. Again, go to the link in the description of this video if you're interested in a career in finance, or if you want me to help your business, personal growth, or whatever it is, and talk to somebody in my sales force. Okay. And actually, I'm going to end this call. Okay, and it's right now, because I got to get ready for my 10 a.m. If you have questions, ask me. If you're a client of mine in our call, our 3.5-hour Zoom call starting in a couple of minutes. If not, ask me next week. And I've got an important announcement next week, which I'm going to tell you at the very beginning of the call that you guys are going to be excited about. Okay, and I am going to play a quick video that I licensed. It's a Steve Jobs interview. I've licensed it now for about 5 years. This might be the most important 1-minute video you ever watch, and this is life-changing advice from Steve Jobs. God bless you guys. I'll see you next week. Thanks.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.